Welcome to the module on Economics and Politics of Financial Modernization. Whenever we discuss on the world of modernization, then it refers to deregulation of financial markets. The deregulation of financial markets is tuned with any liberalized policy of economic model which calls for efficiency and growth orientations within a market-oriented regime. And this basically looks into the attainment of more efficiency and also the attainment of more and more relaxations in the rules and the regulations, whether it's in the field of economics or politics. As a result of these deregulation measures, they also help in inviting innovations in the financial market and also promoting the economic growth. But on the other hand, some other proponents or the anti-proponents of globalization says that this deregulation model can also bring in widening the wage gap, increasing in the income inequality, and in most of the cases may have a negative consequences on the political stability, because the interpersonal relations can deteriorate because of these changes in the deregulative policies. So this goes back to the backdrop of this study, which goes to the 1970s, when the policymakers want to question about the effectiveness of government intervention in the financial markets, because the financial markets were operating in a strict mode, and what is the role of state in this regard. So this deregulation basically refers to interest rates, or it refers to lifting of the restrictions, which may also at times totally disrupt the economic structure and usher in a new set of economic reforms. So in the initial years of banking or in the initial years of political regime, somewhere the resistance were occurring when this deregulation was considered to be acute. But the UK followed the suit in 1980s with the deregulation of financial markets, which helped to establish London as a global financial center. Because as a matter of this global economy, this deregulated regime resulted to a greater autonomy, greater relaxation and flexibility in the operational procedures. This also goes back to the controversial topic over the decades, because the proponents argue that deregulation also refers to greater efficiency. Whenever we talk about efficiency, we not only mean the market efficiency, but also we mean the social efficiency. That means how the society will get benefit because of these models. As a result, innovation in the financial markets, whether it is in hands of technology or in terms of skill formation, everywhere there is a creation of new ideas, and that can be absorbed if the market responds to the global forces. So thereby economic growth gets promoted. However, the critics have argued many times that deregulation also have resulted to the wide gap between the haves and the have-nots, because it leads to the growth of the elite power as well as the growth of the wealth in the hands of few. And this has also resulted in a higher degree of income inequality, the risk factors has increased, and the political stability has become affected. So the history of this deregulation also consequently says that how it basically engulfs into the entire global political economy by lifting of the restrictions and making it an international hub center, whether it is the advanced nations of the world. So it has gained its momentum since 1990s with the ripple of the Glass-Steagall Act in the United States, which wanted to say that how the commercial and the investment banking can be introduced in this financial market, and they can act as a creation of financial conglomerates. Because that is how we can see how the commercial and the investment sectors can work hand in hand and making this deregulated model more robust. This also gives us to the issue that the shadow of the banking system, which operates outside the traditional banking regulations, have been a significant source of systemic risk, because that is how the banking system has gone over the years. And it has greater efficiency, innovation in the financial markets, and these are basically taking up a higher stand which offset the negative effects. Because it is seen that in the world economy, the entire domain of the higher order banking reforms or higher order capital market have given away terms to offset the negative impact of the deregulation. However, this has not been uniform in all the countries because across the countries in the world, they differ in terms of their economic and political standards and definitely in terms of their per capita income. So income inequality has increased in many countries with the wealthiest individuals and the corporates are basically enjoying the disproportionate rise in the wealth or the gain in the financial markets. And as a result of that, some of the countries are not getting the benefit of it. So this has basically resulted in a kind of a dichotomy across the global economy. However, the 2008 financial crisis or economic downturns may be the result of this deregulated mode which was followed uniformly across all the economies. In addition to the economic consequences, this modernization also have some political implications because deregulation in a way actually traces on minimizing the role of government. That means the role of state. So when the role of the state is minimized, it gives the space for the private players to come up and thereby engage in the monopoly operations and thereby act as a dominant power over the economic and the political decision making. So as a result of that, concentration of power is held among the power elites, and this has contributed to the sense of disfranchisement among many citizens who feel that the voices are not heard in the political process. Because it may seem that the country is democratic, but most of the decisions are carried away by the capitalist classes, so voices of the masses are not heard or are not registered. So as a result of that, the entire domain of this political economy gets derailed because of these deregulative measures. It has also been seen that apart from the efficiency innovation, somewhere the negative impacts also come up. The downfall also appears in benefiting the financial markets. Instability also comes up as it is seen in the 2008 financial crisis, and moreover the role of the government gets minimized. So as a matter of fact, it is seen that the entire domain of the deregulation might not have uniform impacts on all over the sections of economy. This basically gives us to the issue that economics and politics of financial modernization is a complicated structure and it has multifaceted dimensions. Because on the one hand, efficiency is being built up. On the other hand, the systemic risks are accumulated over time. So policymakers continue to grapple over these issues, but it's important to consider the political consequences of financial modernization so that the benefits are shared equitably across the society. Then only we can think of an equitable distribution of wealth and income. Now we move on to the most important issue arising after financial modernization is the concern for income inequality. Because apart from the positive features, financial modernization has a risk concern, particularly in those countries where the wage gap is huge, and that is for the developing and the lower income countries. So income inequality and financial modernization are the two concepts which are considered to be the interlinkage topics over the decades, because it has been a concern for policymakers and the scholars. So one of the notable effects is that growth of the financial sector, which is rising, is becoming concentrated in the hands of few large banks and financial institutions, because that is how we can see the polarization in the growth model. Because it is seen that globalization in the world economy has resulted to the polarized growth, which means that the financial modernization has been concentrated in the growth of limited people or the limited sectors. So this has concentrated to the growth of income inequality, so that the increasing share of income is going to the top of 1%. So additionally, it has led to the growth of many risky lending practices. Because risky lending practices means housing loans are given at a low interest rate, expansion of monetary sector is coming up, and finally there has been some verge of crisis or collapsing of the entire system. So some kind of risky lending practices such as subprime mortgages, which are disproportionately rising, which is affected the low-income households, and income inequality is on the rise. So this rise in the low-income household is actually making the world economy to be segregated into the bipolar growth, and at the end of the day it bursts out like a bubble, and thereby the crisis gets erupted. Moreover, it is seen that whenever we talk about a private sector model where the role of the government is minimum, then the entire global economy is rested upon the risk rise of the shareholder value model. So the risk and the rise of the shareholder value model prioritizes shareholder returns over the stakeholders, because these shareholders are basically considered as enjoying the ownership over the public assets, and they are actually exerting a dominance role over the stakeholders. Stakeholders mainly refer to the employees and the customers who are basically having a long-term role, but the shareholders are prioritizing over them. So this model leads to a focus on short-term profits, cost-cutting measures, and as a result of that, wage and benefits are reduced for the employees. So whenever we talk about a shareholder model, then it actually believes in the cost minimization exercise. And because of cost minimization, the cost-cutting strategies are being adopted, which might affect the wage structure, which might affect the dignity of an individual, and which might affect the labor relations in terms of the recognition of the work or the service. And this is actually hinting the human rights under the political economic regime. So any such kind of shareholders' dominance is actually leading to reduced wage and benefits to all, which might create unrest or tension in the workplace. So this had particularly significant impact on the low-wage workers who are basically more vulnerable to these changes in the labor market. This also applies for the contractual or the casual labor who are affected because of this. Another important issue that crops up after this deregularized mode, particularly when the wealthier classes are concentrating more in terms of clusters or the wealth is accumulated in the hands of few, is basically the rise in the financial crisis of 2008. So this is basically making it more apparent or visible about the relation between the modernization and inequality. And this is because of a banking system which is there, but that is basically considered as a shadow banking system, which means it is not actually following the rules and regulations, or there are certain violations which are difficult to trace out, unlike the traditional banking systems. Another important issue that crops up in these risky lending practices is the collapse of the housing market, which occurs with the collapse of the Lehman Brothers, and at the same time, subsequent financial crisis. So this has resulted to a disproportionate rise in the wealth, and also the low-income households are getting deprived, and this is further widening the income or the wage gap. Financial modernization also have a significant role in exacerbating the income inequality because of the risky lending practices which are on the rise. So whenever we are talking about the risky lending practices, it's a result of the subprime mortgage crisis, or it's a result of any kind of collapse of any kind of bubble which is created for a very, very short period of time. So it is important for the policymakers to recognize that the potential impact of the financial modernization or income inequality and to take care of the negative effects. This may clearly take care of a good governance model where the regulatory measures are strictly maintained, stability of the financial markets are taken up, and the policies are also taken up so that the stakeholders or the employees and the low-wage workers are taken care of. Then only we can say that entire model can have a better distribution in terms of income and wealth, or then only the deregulated model will have some positive effects which will actually sustain for a longer future. This brings us to the issue of another important arena under the political economy is the concern of political stability. Because financial modernization and political stability are also interlinked with each other. This goes back to one of the most strongest parameters of governance, which calls for voice, accountability, rule of law, government effectiveness, and definitely the concern of political stability. So when one hand financial modernization brings significant changes in the financial system, economic growth gets facilitated and thereby the development. Because whenever we talk about economic growth, whenever we talk about development, all these are holistic issues which actually concern all the sections of the society. On the other hand, the implications of political stability, income inequality also are a concern. So one key concern is that the wealth concentration, which makes the income distribution to be bimodal, or there are multiple peaks and the wealth is concentrated across many hands. So this will give rise to more widening in the inequality. So this can result to more social unrest, this can erode the efficiency in the market, and also this can reduce the legitimacy of the political institutions. Because the credibility of the political institutions may be a question whenever there has been more and more priority of the stakeholders rather than the shareholders, because the stakeholders are considered to be the customers and the government employees whose priority should be taken into recognition, but the shareholders are only running of the profit-making behavior. So as a result of that, inequality can result to some kind of political disruptions. Another extreme case is particularly the countries where the democratic institutions are weak or non-existent. There the political instability and conflict are very much frequent. And this is a conflict or a struggle which appears as the class struggle within the political economic structure. And this class struggle results to more and more accumulation of wealth in the hands of richer classes, and thereby the poor classes are getting deprived of. So therefore, addressing income inequality is crucial whenever we talk about ensuring political stability or we want to reduce the social or the economic unrest. So the relationship between financial modernization and political stability is complex because it has many multifaceted issues, because on the one hand it actually facilitates economic growth, but on the other hand it also leads to rise in the instability in the political structure. So this has resulted to various kind of issues which is concentrating within the reforms, particularly when the social unrest comes in, when the political tension comes in, and when the democracy gets eroded over time. This is basically rising up from the growth of the transnational corporations, multinational corporations, which are also invading the economy through various channels of deregulation or flexibility in the structure. And as a result of that, the entire economy gets non-existent. So addressing social unrest or income inequality is a concern for the entire economic model or the political structure. And that is actually apparent from any kind of financial modernization. So in any economy, whether it's a less developed or a higher income economy, this type of consequences are inevitable. However, some steps may be taken so that some kind of mitigation effects can come up with regard to this kind of issues. And then only we can say that the inequality can be reduced to a certain extent. Another important issue that arises in the context of political stability or income inequality is the intervention of technological upgradation within this interconnectedness of global financial markets. Because financial modernization also calls for a financial economy which cannot remain in an isolated model. It has to get integrated with the rest of the world in terms of interconnectivities. So this basically refers to how the challenges of the financial markets comes up and how these challenges can be coped up within our economy. Because any globalized economy is linked to the rest of the world in terms of financial integration. So this actually calls for a more financial innovative model, and this innovative model basically calls for challenges which they have to face with the futuristic world. So any kind of mode for financial model calls for the need for regulation and call for the financial stability. Because an economy, in order to cope up with the challenges of financial innovations, has to be resilient and strong in its growth performance. Another important issue that crops up in the complicated structure is that financial actors can evade regulation. This can also create the policymakers to keep up with the changing role of the finance, because any kind of role of the finance needs to be taken up at the very outset. So to address these challenges, policymakers and scholars have given greater attention to the political economic structure, because it basically refers to how the economic and the political factors are interlinked with each other so that the behavior of the financial markets can be taken care of, and also they can go for a broader economic and social outcomes. So as a result of this important interlinkage or the dynamics, it is very crucial that how the financial stability can be ensured so that all these challenges can be absorbed by the economic model or the economic countries and reduce the risk of political instability and conflict. Because any such kind of intervention, either by technology or by the concentration of the wealth in the hands of few or by the dominance of the MNCs, always leads to some kind of social unrest, so which can be mitigated if the political stability can be ensured to a greater extent. This also brings in some of the benefits to the global economy as a new challenges which are coming to the economic concerns. So to ensure the long-term sustainability of the financial markets, it's very crucial to strike a balance between the financial innovation and the regulation. So whenever we talk about financial innovation, we have to take care of the technological innovations, how it can speed up or how it can accelerate the working structure. But at the same time, we have to be conscious about the impact on the society, either in terms of inequality or in terms of instability. So to address these challenges, effective policies are needed so that the economic growth and the social equity can be taken care of. This brings us to the historical foundations of the financial systems. So as we can see that the financial systems evolved over time, there has been a need for regulation and oversightedness at every juncture. Say the 20th century saw an expansion of the government involvement in the financial markets, particularly following the Great Depression. Because during the Great Depression, it was felt that there has been an acute deficiency of the aggregate demand, which the government has to step in and to stimulate the demand parameters, either by increase in spending, either at the household level or at the government level. The United States government established the Securities and Exchange Commission in 1934 so that the security markets and the fraud-related activities can be prevented, and so that there has been a proper surveillance and monitoring over it. So all these are taken up to prevent any kind of conflict of interest. Similarly, in the post-Second World War, it has been seen that financial systems are continued to evolve so that the geopolitical situations and the economic conditions are changing. So as a result of that, the Bretton Woods system, which was there in 1944, created a cause or a necessary action for international monetary cooperation and established that US dollar as the world reserve currency. This was very much needed to take care of the exchange rate instabilities and making the dollars as the universal acceptable currency as it is seen under the Bretton Woods system. This also goes back to the 1970s, when there was an end of the Bretton Woods system, an emergence of the flexible exchange rates, and this has resulted to more volatility in the currency markets. So that means with the rise in the volatility, the challenges were more uprising, and that made the economies in the world to take up the reform process. So 1980s and 1990s basically saw a wave of financial liberalization, where majority of the countries in the globe participated. They wanted to dismantle their existing financial systems, which was very much restrictive, with lots of complexities and multiplicities. There has been streamlining of the rules, rationalization of the interest rate structure, and so that there can be a hassle-free environment for inviting the foreign capital. So the growth of the global financial markets are taken up. Emergence of new financial instruments were coming up, like the derivatives and securitization. So as a result of that, financial liberalization is taken up. So however, 2008 financial crisis demonstrated the potential dangers of this deregulated environment. So it is very clear that this deregulated environment has come up with greater flexibility in the structure. However, there were some risk factors. So the risk factors was basically a kind of renewed focus on the financial regulation and stability, because these factors were felt when expansion was taking place of the monetary system and there has been lack of confidence of the investors in the entire debt market or equity market. So the Dodd-Frank Wall Street Reform and the Consumer Protection Act actually made new regulations to United States financial system, and this was done to prevent any sort of future crisis which can crop up because of the subprime mortgage or any kind of bankruptcy which can occur at any point in the globe. So financial systems, as they continue to evolve, it is very clear that how this economic development and the global integration can be taken up. However, financial systems also need to be well regulated, proper monitoring, surveillance, so that the ongoing policy innovations or the technological interventions can be balanced or can be adopted. So the historical evolution of financial system makes it very clear that we can appreciate the challenges, we can actually foresee the opportunities, but at the same time, it should not be carried away by the global forces where the domestic economy has to suffer in the long run. This basically comes into the dimension of economics under the financial modernization. Because apart from the political sphere, there has been a large proportion of economic issues or economic ideologies which are linked within this issue. The most important ideology is about the reform process. So any kind of reform which has occurred in the financial markets in terms of modernization basically refers to the dependence on advanced technology. So these technological high-end services are making it a glow in the entire economy. New regulations are coming up, and globalizations also are coming up in transforming the markets. So whenever we talk about the digital technology coming up, we can see that it has resulted to the rise in the electronic trading platforms, which makes it very clear that it's a high-end service where the manual or the dependence on the skill of the labor is being taken away. Some kind of algorithm trading, blockchain technology, all of them makes the financial institutions to come up in a bigger shape with more and more dependence on high-end and capital-intensive production structure. So as a result of that, financial products or the services which are offered to the customers are greatly varying in terms of their quality and in terms of their total proportions. So at the same time, financial modernization has been driven by the changes in the regulation. So when we talk about the regulation, we mean 1980s and 90s, which led to the products which are evolving like the derivatives and the securitized assets. But at the end of the day, these are absolutely volatile, and this has to be monitored in its proper operations. Another important issue that crops up in the discussion of economic ideology and economic dimensions of this modernization is the risk management. So whenever we talk about more and more private sector's intervention, whether it's in the debt market, equity market or derivative market, or we talk about in terms of the exchange rate markets, then risk management is very important. And thereby more and more investment opportunities are created for the clients. So globalization has come up a major role in this regard, because globalization has its facet in the financial modernization, which has become increasingly connected. Wider range of investment opportunities are coming up, and there has been more flow of capital across the borders. But it has made more and more risks to come up, because these nations are vulnerable to external forces. This can also create unrest, political tensions, at the same time economic inequalities. So keeping in view both the economic and the political adverse impacts, it is very much important to control the risk of this financial contagion so that the financial crisis can be mitigated. So the economic benefits are very clear, because it actually calls for an efficient model, it calls for an innovative model, it also creates how the financial products can be created. But at the same time, it has been seen that allowing the capital freely, creating new opportunities for economic growth, all these are interlinked in the process. However, it has been also resulted with the issue of financial instability which occurred with an example of 2008. So on the one hand, it has resulted to the economic inequality, as it is seen that with this growth of the financial powers or the financial capitalist, the growth of the capitalist classes have come up, which has resulted to small group of investors or financial institutions. So the economics of this financial modernization is a multifaceted one, a complex one, and it actually believes in a world which is absolutely surviving in an intersection of technology, regulation, and globalization. So basically these three are having a kind of a transitive relationship where it brings in technology, brings in regulation, brings in globalization, and so the potential for economic growth comes in. But at the same time, there are certain risk factors to financial stability and economic inequality. So in order to address all these issues, it is important that how the policymakers are going to make a balanced approach or take up a balanced policy, so that on the one hand, they are promoting financial innovation, they are also managing the risk so that the benefits of financial globalization or financial modernization can be shared by all. Here all refers to the stakeholders of the entire society and not the shareholders of the different capital assets which are being acquired. This brings us to another domain of this particular dimension, that is the politics of financial modernization. So as we have seen that the economics of financial modernization basically rests on the regulatory mode which needs to be established. Now we move on to the politics of it. When we talk about the politics of it, then definitely it is actually stressing on the need of the government's role. Though deregulation stresses on minimizing the role of the government, but it does not mean that the government will be shedding away the role, but it will come up in a defined or a redefined structure. So government's role needs to be recognized. International organizations also should come up in a better way, and other stakeholders also should modernize the financial system and the infrastructure, because these two important inputs must go hand in hand. So financial modernization is not just a technical issue, it has a deeply political one, because here the government plays an important role to actually act as a balance in order to find out how much technological innovation is required and whether the interest of the common masses are retained or not. Then only this can have a significant effect on its efforts. So one key political factor of this financial modernization is the role of the state or the role of the government. So as a result of that, government should regulate the market, ensure the stability, and makes it more operational in this regard. This also brings in that there is a tension between the need for regulation and the desire for innovation and competition, because these two issues are having a trade-off. Whenever we wanted to go for more deregulation or competitive model, then the question of regulatory systems are there, because they need not to be more stringent. But this has created the traditional models of regulatory systems to be attacked. So interest groups are another important political factor that's shaping the financial globalization or modernization. Who are the interest groups? These are mainly the industry associations, which has a tendency to come up with a trade unionism so that they can protect the interest of the workers. At the same time, they have different views on the financial markets. So this calls for a more structured labor unions, calls for a more structured consumer advocates, those who will take up or they will mitigate the negative impact of these capitalist classes and take care of the masses. So as a result of that, any kind of such unionism or these interest groups should have a significant pressure on the governments to promote and to take care of their preferred policies. When we talk about international organizations which must be there to regulate the entire model, they are none other than International Monetary Fund, IMF, and World Bank. Because whenever they talk about this, they are actually required for giving any kind of technical assistance, any kind of advisory role to the government, so that they can influence their policy agenda in a better way. That is how the advocacy reforms can be adopted. Another important issues that comes up that with the growth of the financial technologies, then the market volatility gets more and more prominent. And this market volatility has a ripple effect across the entire globe. So this is absolutely one of the direct impact of financial modernization. So financial modernization refers to social unrest on the one hand, because it leads to degree of deprivation to be rising, because the marginalized classes are worse off, and at the same time there can be a loss of legitimacy of the political leaders or institutions. The institutional rights can be affected. So as a result of that, it can bring many benefits, but the potential implications are taken up. So a democratic accountability, social inclusion, financial stability, these are required at the need of the hour so as to eradicate or mitigate the negative effects or the impacts of this financial modernization. Now we move on to the challenges and the opportunities. If we look at the issues of financial modernization, it takes care of multiple views. On one hand, it has some positivities in terms of efficiency building. On the other hand, this also leads to political unrest. So a balanced approach is needed. If we refer to the challenges, then the first challenge is the risk which is arising because of financial instability. This is because of the interconnectedness. Because entire segment of the economy cannot participate in this fast-tracking world of financial modernization, and so unrest or wage inequality crops up. Another is concentration of wealth in the hands of few, which is very much alarming. Political turmoil or tension which can occur because it can refer to a perception of too big to fail mentality, so that the concentration of power is accumulating, and this can come to a greater rise of monopoly power. Risk is also associated with the financial technology, because these are the technical risk, as they call about cybersecurity or any kind of market manipulation that can be done if the regulated system is not so strong. The opportunities lies in the positivities of financial access, because whenever we talk about financial reach or financial access, we mean that it is basically reaching for the underprivileged mass of the population, so that the unbanked and the underbanked can be targeted and greater people can be brought into the formal regime or the formal structure. Another important opportunity lies in the innovations. The potential for new sources such as crowdfunding, peer-to-peer lending, these also can come up. NGOs can come up, microfinance institutions can grow. So as a result of this can help in improving the risk management. This can also help in monitoring the financial systems with greater participation of authorities. This calls for some kind of policy responses from the authoritative point of view. Policy responses are basically the regulation which must look after the financial protection. Monetary policy should also be taken care of, because it is ultimately the monetary system which gets expanded. So if it goes beyond control, then it will lead to huge crisis. So maintaining stability, interest rate adjustments, and quantitative easing methods to be applied. Fiscal policy is also required, because it calls for how the income inequality can be tracked, either through tax policy or either by government spending programs. So a kind of reforms is required in that regard also. And more importantly, financial inclusion which calls for a better mobile banking, microfinance, and also the reach of this financial modernization can be taken care of. This also brings us the policy mix which should be between the monetary sector and the fiscal economy, so that promoting innovation and growth at the one end, and at the other end ensuring the protection of consumers, financial stability, response approach, so that the risks can be avoided. So by looking at all these things, we can see that the potentials of the financial modernization can be taken care of. A more resilient and financial system can come up, so that all the members of the society can be taken care of. This brings us to the concluding issues on these particular discussions, which makes it very clear that how the economic and the political factors must work hand in hand in order to shape the behavior of these financial markets. Because on the one hand, it refers to more and more capital depending, efficiency building models, but on the other hand, the risk factors also arise not only from economics but from the political domain. So it is clear from one particular case study that the 2008 financial crisis made it clear how the deregulated mode of the economy makes it more vulnerable. But on the other hand, policymakers also must strike a balance between this promoting innovation and ensuring a markets to reduce the risk over time. This basically makes the study of the political economy and financial markets to be clear so that all the type of risk management can be taken care of. The policymakers also wants to try the balance between these two issues so that the risk of the financialization, growing influence of the financial markets, and also integrating with the world economies, making a creation of wealth in the hands of few, all these things are inevitable in any sort of financial modernizing models, but the policymakers must consider how the wealth can be distributed equitably. Then only we can say that the entire economy can come in a proper order. So this also brings in the questions of political instability, corruption, weak institutions. All these things are reducing the investors' confidence, so a good governance model is to be built up. Then prioritizing the financial stability should come up, so the financial regulations must be in shape. Businesses must also prioritize the long-term sustainability and the social responsibility. This is very crucial because they should take care of the concern of the stakeholders rather than the shareholders. So this can bring us more and more social and political implications and the responsibility of the shorter term gains. So the political economy of financial markets is complex and dynamic. More and more sustainable and equitable growth can take place. And at the same time, social responsibility, financial health can come up so that financial modernization can serve the broader interest of the society. Because that is very much important that entire mass of the society gets benefited from this technological intervention or from any kind of innovations that take place. So this calls for a good governance model in that case. Hence, the interlinkage between the financial modernization and the politics is actually deep-rooted. At the same time, it calls for a good governance model, a effectiveness of the government. At the same time, financial technologies and interventions are required. Hence, a good model in terms of policy, which must be balanced to take care of the effects of both the domains, are called for.